What's going on, guys? Just throwing together an update video. I have a lot to talk about in this video, so I'm just going to jump right into it. So let's take a trip down memory lane really quick. And I have a screenshot here from, this is probably my second or third video on YouTube, talking about SPY and how SPY was bullish and how the meme basket's about to squeeze again and how SPY is going to be going to new highs. And this is at $400 before SPY broke the descending broadening wedge here. So this was my second or third video on YouTube talking about how bullish SPY is. So jumping to present day now, SPY touched 450 today. That's a huge deal. Very, very big deal. The macro on SPY here, the descending broadening wedge here. The last screenshot I just showed you, we would have been sitting somewhere right here, right before the breakout of the wedge. So descending broadening wedge for a year, breakout, retest, reclaim the ascending triangle. The descending broadening wedge transitioned into an ascending triangle. So you reclaim the triangle, you're sideways towards the end of it before you break out, you get upside, pull back to the 20, find a bounce off, and then today, a new 52-week high on SPY once again. 450.38, I believe, was the high of the day today. Very fucking bullish. Very, very bullish here. 73 days in a row closing over the 200 EMA. Golden cross on the daily. Same story, different day. Bullish as fuck on SPY. And if you recall me saying in all of my previous videos, I'm touching on SPY daily because the previous two times that AMC squeezed, January and June, SPY was rallying to the upside in a very similar fashion to what we're seeing here. And actually, where that was right here. This is SPY rallying to the upside in January and June, while AMC and the rest of the meme basket was squeezing. So there you go, and here we are now, rallying to the upside the exact same way that we saw back here. Very important. Now, the weekly on SPY. Very bullish here. I just wanted to pull this up because I want to touch on something. SPY will be going to all-time highs. And having touched 450 today, there's two levels of resistance left. Two serious levels of resistance left. The first one being 458, 460 range. This yellow dotted line right here. And then the one after that would be 470 up here. Once we break 470, all-time highs on SPY. We're two levels of resistance away. There's not really much price action up here, so that's that. Now, if you recall me saying in my last video that SPY is playing out perfectly symmetrical, and 450 was on the table. I said 450 was on the table Wednesday for Wednesday. Wednesday we saw upside to 447 and change, 447.60 I believe, and then today broke 450. So if you recall me saying the move is playing out perfectly symmetrical, and really quick before I do this, here's the symmetry on SPY, and I said we're now in this green circle here, comparably to this green circle here. Zooming in on that, so on the left would have been the one on the left where you came up to 450. On the right is the current, and it's the exact same move on both sides. You have your rip to 450, you have your rip to 450 in quotes because we didn't come all the way up to 450. It was 444. You come down, you find support, you double top slightly higher, come down, find support, double top slightly higher, break down to the middle of the range and play out a W on both sides. And then we left off here, and I said, I believe it was Tuesday, we left off here, and I said for Wednesday, expect a gap up, and 450 was on the table. What happened on Wednesday? We gapped up, we didn't make it all the way to 450, 447 and change, and then today, 450. So this move is playing out perfectly symmetrical. The stock market is completely fucking fake. You can't say shit to me. You cannot say a single thing to me. I don't give a fuck about fundamentals. I don't care about balance sheets. I don't care about any of it. The stock market is completely fake. Now, getting into the symmetry on SPY, and here it is. The blue box is your middle here. So the blue is your middle. You have your lowest low here. You have one break above the ascending triangle here to retest the macro of the wedge. Coming into the red, you break below the horizontal line at 380 on both sides. Over here you do, and over here you do. Over here was slightly lower, again, to retest the macro of the wedge. From there, in both reds from the bottom, you bounce up to 418 on the dot, and you find a rejection. So same there and same here. You reject 418 on both sides, and then from that rejection, you come all the way down to 380 on both sides. You have a perfect bounce on both sides at 380 here. From there, you bounce up. You have three touches on 430, this purple circle here, comparably to over here, three touches on it before you break through. From there, you come up to 438, reject it, and break through. Over here, come up to 438, reject it, break through. Then you get into the green, which was the pattern I just showed you in the last slide. You have the move to 450 over here. Over here, we were looking for 450. We didn't get the full move to 450. Came up to 444. Then you get the pullback, the double top. You get the pullback, the double top. Come down one more time to the middle of the range. Come down one more time to the middle of the range before breaking to the upside. Now, the target over here would have been 458, and we're playing out this lower than it played out back here. So the target over here, we're pretty much at it right now. 450 to 453-ish is the symmetrical equivalent of this move right here up to 450. So the next move that we're seeing is a pullback now to the top of this range, the top of the previous range. So the top of this. So 443 to 444. It's possible we see a little bit more upside to 452, 453. Find the top, and then we will be pulling back to 443, 444 to establish support there. Here would be the pullback, establish support before you move higher. So that's what we're going to be looking for now. When we get to this point here, the symmetrical equivalent of this point here, I have to, on a daily basis, be just following the symmetry here and seeing if it plays out. The symmetry might break at this point, because from this point, you're expecting a pretty nasty pullback, and that pullback would pretty much take us all the way back to the top of the ascending triangle. So you get a move all the way up to 460 pretty much, and then pull back all the way to 418 to test the top of the ascending triangle here. I'm not sure if that's going to be the case. We're going to have to take it day by day and see how it plays out. Currently, the symmetry is perfect. And if you recall me saying, and I said it before this even happened, that this move would play out more or less like a cup and handle before we moved higher. Before it even happened, I said this move is going to play out like a cup and handle. And that is exactly what you have. Here's your cup, there's your handle, gap up from there, moved higher. So that's pretty much it for SPY. It's very bullish. It was in January and June when the meme basket, AMC, GameStop was squeezing. And it's bullish now. It's going to new highs. It looks great. So getting into AMC now. And this is the macro on AMC. So again, you have this descending trend line over here, 2017 all the way down to 2021 where you squeeze. And that would be comparable to the descending trend line that we have here from the breakdown and the flag in November. From the June highs, you have this descending trend line here all the way down. And you have your macro fractal break right here, this gap down that you have here, comparable to the macro fractal break you have here, this gap down here. From the gap down, you play out this sideways W type move, as you do over here. Shit. 1 second. So you gap down, you play out this sideways W type move before breaking down into the downtrend. And again, the downtrend, you're just laddering down. So in the green, more or less a W. Same over here, more or less a W. You're just laddering down. The red, more or less a cup. More or less a cup over here. And the blue, you come down, you bounce up, come all the way down to the bottom, curl up towards the end. Over here, same thing, come down, bounce up, come all the way to the bottom, curl up towards the end. And from there, you drop down to the flat portion here, where you have 1, 2, 3 touches on the bottom before you break the triangle and squeeze. Same thing over here, 1, 2, 3 touches on the bottom, and we are at the end of the triangle here, and we're at the end of our macro, and we're about to break out and squeeze. So that's the macro. Here's the other perspective that I usually show, where I took the colored boxes off of the flat portion here, and I did the same over here, and I threw some lines. So again, a macro fractal break right here, you play out the W, 1, 2, 3, 4, 5, 6. Macro fractal break right here, you play out the W, 1, 2, 3, 4, 5, 6. From the 6th point, you drop to the bottom, where you have 1, 2, 3 touches on the bottom. So from the 6th point, drop to the bottom, 1, 2, 3 touches on the bottom. So now, and I'm actually leaning more bullish now than I was in my previous video. Like short term, because back here what happened was you got a lower low on the third bottom. So I was looking for a lower low. I said we don't have to get one. We still didn't get one. And the bull case is looking much more strong now, where the bottom would be in, and we would already be in the uptrend that's about to break us out of this triangle, and we're going to squeeze. So this looks very good. Another thing while I'm here, every iteration here, green, red, and blue, you come up on the other side. So the green, you come up on the other side. The green, you come up on the other side. The red, you come up on the other side. Same here. And then the blue, you come down, you drop to the flat portion, play out the flat portion, squeeze. Blue, come down, drop to the flat portion, play out the flat portion. What's next? Squeeze. Again, in the blue, we're curling here to the upside. So you could very clearly see the curvature here, curling to the upside, very flat on the bottom, completely bottomed out here, completely flatlined. So curling here, completely flatlined, and now curling up to the upside. So this looks very, very good. Jumping into the micro now. And again, what we're doing with the micro, and here's the macro. So just zooming out fully, here's the full macro perspective. And with the micro, what we're doing is zooming in on the orange, purple, and blue here, comparable to the orange, purple, and blue here. So that's what we're going to be zooming in on the micro now. So this is exactly what I just showed you, the flat portions on both sides. It's an area chart rather than candles. The area makes it much more visible. It's crystal clear like this. So the orange, you come down to the bottom, your first bottom, you have chop there, and then over here, same thing. Come to the bottom, your first bottom, you have chop there. From that first bottom, you get 3 peaks in increasing height, 1, 2, and 3. Third peak takes you to the end of the purple. Over here, same thing. From the bottom, 1, 2, 3. Increasing height on each peak, the third peak takes you to the end of the purple. So from the end of the purple, and again, when you come up on the right side of the purple, you have a higher high, and same over here, higher high on the right side of the purple. From that, you come into the blue, where you come all the way down, you break below that horizontal line I've talked about multiple times, you bounce above it, and then you come down to your second bottom. Over here, same exact thing, come all the way down, break below the horizontal line, bounce above it, come down to your second bottom. From the second bottom, you get into the tri-peak, 1, 2, 3. Over here, same thing, 1, 2, 3. And then from the third peak, you come down one last time to your third bottom, your third and final bottom, as we did here, before you form this uptrend here, breaks you out of the triangle, and it's a straight line into your squeeze. So that's where we are now, having just came down to our third bottom, and now potentially in the uptrend that's going to be breaking us out of the triangle and us squeezing. Once again, we're tracking this much faster. In the way it played out prior to the January 2021 squeeze, from the start of it to your third bottom was 318 days. In the current cycle, from the start of it to our third bottom was 204 days. So we're tracking this much faster. From the third bottom until your peak in 2021 was 22 days. And we are, I mean, if the third bottom is in, and there's still a case where it's not, and there's a case where it is, I'm leaning more towards the bottom's in now. If the third bottom is in, we are going to be squeezing very, very soon. If the third bottom is not in and we're going to get the lower low, we're still squeezing very, very soon. But if it is in, and this is the start of the uptrend here, we are squeezing extremely soon. So that's that. Now, getting into this, and I don't really feel like going over this, but I will quickly. So again, what we're doing here, and this is candles now, we're looking at the flat portion of the 2021 cycle, comparable to the one, our current cycle here, and the RSI is on the bottom in white. So it's the same thing on both sides. You break below, you come above, break below, come above. So same thing, break below, come above, break below, come above. The purple is the cup over here. The red, you break below again, you break below again, bounce up, come down, bounce up, come down into the green, break above twice here, break above twice here. You come down, you bounce up, you come down, you bounce up. And then the blue, you come down, break below, blue, come down, break below, and then you bounce up, and then you pull back here, bounce up, pull back here. So this green circle here, comparable to this, is where we would be, and where that would be is right here. Actually about to get this gap up here, which will be taking us to our breakout. So that's where we are now. So that's the RSI, and now the histogram and the EMAs on the 4-hour. So just looking at the blue box here for the histogram, in the start of it, you break below, so you start red, you flip green, you flip red, and then you flip back to green, and that's where you have your uptrend and your squeeze. So over here, same thing, you start red, you flip green, you flip back to red, and now we just flip to green again. So that looks good. The EMAs here are the exact same. The movement's the same, the EMAs are the same, the RSI is the same, histogram's the same, macro's the same, SPY's the same, everything's the same. So 20 EMA in white, 50 EMA in red. So in the orange here, the 20's hovering under the 50 the whole time before you break above it, and then you get this wave move. So you break above it, you break back underneath the 50, and then you break above it again higher than the first time. In the current cycle, same thing. 20's under the 50 the whole time. You break above it, you break back underneath, and then you break above it again slightly higher at the end of the purple. Same over here. From there, from the end of the purple on both sides, the 20 comes back underneath the 50, all the way down, and then when you come into the tri-peak, you cross it 3 times. The first peak you cross it, the 20 crosses the 50, the second peak it crosses, and then the third peak it crosses. Over here, same thing. First peak it crosses, second peak it crosses, third peak it crosses. From the third peak, you come below the 50 again, hovering under it, and the next time the 20 crosses the 50 there is when you squeeze. And right now, the 20 is sitting on top of the 50 EMA, having just came underneath from the third peak of the tri-peak, hovering under it, and it's sitting right on top of it right now. On the 4 hour, it's sitting on top. On the daily, it's a little bit lower. So the next time the 20 EMA crosses the 50 on the daily chart, we're squeezing, or we'll be in the middle of our squeeze. Is pretty much what I'm saying here. And now getting into why I think the bull case is more likely. First of all, if you recall me saying in my last video, we have this macro downtrend here, where you have multiple rejections, your first, your second, your third, your fourth here, right there. And we actually broke this to the upside. So there's the breakout of it, there's the retest, nice bounce off the retest, and then forming some higher highs and higher lows today. So looks very good. This looks good. Another thing, the daily chart here. So here's all three of our bottoms, the first bottom, the second bottom, and the third bottom. This is on the daily, and on the daily, without looking at the after hours chart, all of these bottoms, you're forming higher lows. So there's your first bottom, higher low, perfect trend line there on the bottom. That's exactly where we found the bounce. And then we have this descending resistance here, and it pretty much matches up with the end of the triangle here. And again, and I can show this on the other chart, we're expecting this move to play out symmetrically as it did in 2021. So here's where we would be. Here's your second and third bottom, your tri-peak, the W that led up to the squeeze in January 2021, and the current cycle here, the second bottom, the third bottom, and the tri-peak here. This move here is perfectly symmetrical. So you come down, bounce up here, first bottom, the tri-peak would be the middle of the move, and you get the second leg of the W here, you bounce up, you come down, and then you squeeze. Over here, same thing. You come down, you bounce up, you get your second bottom. The tri-peak would be the middle of the move, and then our third bottom here, and now we're in the uptrend. So the symmetrical equivalent, because this pretty much lines up at the bottom of this, I mentioned multiple times, this is more or less like a star-type bottom here. The symmetrical equivalent of where we would be now is pretty much a straight line here. So it would play out as a W with the tri-peak in the middle, the exact same way that we saw back here. One other thing I want to show, I'm not going over this, I really don't feel like going over this, and it's not updated anyway, but it doesn't really matter. This is the daily chart, both cycles, the flat portion on both sides. The gaps on the daily are in the exact same spots. The EMAs are here too, they're perfect. If you want to pause and look at it, look where the gaps are, look at the EMAs, the behavior of the EMAs, look at the movement, it's the same thing on both sides. This is just more candles here because we're playing this out faster in the current cycle. That's pretty much it for that. And the next thing that I'm about to show, I'm taking no credit for this whatsoever. Sokotoa actually was the one who brought this to my attention. I had no idea, but AMC and GameStop are the exact same stock. So like you have morons like Morant's Rants who just, since my first video on YouTube, just harassing me nonstop, challenged me to a $10,000 fight, which I accepted. And then he backed out and said, oh no, once AMC sees $140, then we can fight. Guess what, Morantz? It's almost here. And I didn't forget the offer. I accepted your offer, and I will be flying to California as soon as we squeeze. I hope you know that. So your beloved GameStop, Morantz, is the exact same fucking stock as AMC. So you could take your balance sheets, and you could take your PE ratios, and you could shove them up your fucking ass. Same stock. Look at this. Look at the movement. The January squeeze, come down. You get the pop here. You get the pop here. Come down, form a cup. June squeeze. Same thing here. Look at the orange. The orange is GameStop. The candle is AMC. Tracking it perfectly. Same exact fucking movement all the way through. All the way through, and then we would be in the flat portion here. GameStop's flat portion versus AMC's flat portion. We're about to fucking squeeze. Once again, I'm leaning MOAS, so that would go for the whole meme basket. Price targets are going to differ for each stock. Conservatively, for AMC, $140 based off macro fibs. $140 would be an algorithm squeeze. I'm leaning more towards we're going to MOAS though, honestly. That's what it's looking like to me. I'm pretty sure I touched on everything in this video that I wanted to. I'm not going to pull up the fibs again. I did it in my last video. There's no really reason for me to do that. Quick recap while I'm here, I guess. SPY is very bullish, and it was in January and June 2021 while the meme basket was squeezing. Same thing, broke both of its macro patterns here, broke the descending broadening wedge and the ascending triangle, broke both of them to the upside. Golden cross on the daily on the S&P 500 is insanely bullish. Haven't seen the 200 EMA in 2 months. This range we're trading at right now, we haven't seen since April 2022. and from October 2022 until present day, forming higher highs and higher lows to the upside. Insanely bullish on SPY. Very important for the meme basket, or correlation, I should say. So SPY is very bullish. The macro on AMC is fucking perfect. Absolutely perfect, where we would be at our third bottom right now. There's a case the bottom is in. There's a case the bottom isn't in. I'm leaning more towards it is in right now. I'm leaning more towards the bottom is in, and we're actually in the uptrend that will be breaking us out of this triangle and squeezing. So I'm leaning more towards the bottom is in here. Macro is perfect. The micro looks amazing. The micro here looks amazing. The RSI is the exact same. Same exact RSI on both cycles. The histogram's the same. Everything looks great. There's no really reason to recap. Everything looks amazing. Again, I'm leaning MOS, and you know what comes from MOS could be catastrophic for the market. We'll see how that plays out. Things could get pretty fucking wild, and I'm expecting it to happen soon. As far as AMC for tomorrow, I wouldn't expect too much. Maybe another sideways day. You know, forming higher highs and higher lows potentially. In the range that we're sitting in right now, I would expect to be there. Next week, Monday, Tuesday, I would expect upside. Maybe a gap up. That would be the way it played out back here, actually. From your third bottom, you get this pop, and you get the pullback, which is where it would be now. From the third bottom, you get the pop, the pullback. This straight line here, this pop here, was a gap up, and that happened on Monday, first day of the week. So Friday, you finished playing out this, and then Monday, you just gapped up. Or sorry, Tuesday. There was no market Monday. So pretty much first day of the week. Tuesday, you got the gap up here. And that gap up is the breakout iteration. You get the first move here, you retrace, you break out. So I wouldn't expect too much for tomorrow, but this next couple of weeks is going to be very interesting, to say the least. And that is pretty much it for the video. Potentially doing another update video tomorrow. I'm going to be going upstate this weekend, so I'm going to be pretty busy. If I don't post an update video tomorrow, potentially Sunday I will. And that is pretty much it. Hope you guys enjoy the rest of your night, and I will catch you in the next one.